Yeah, I'm losing my edge.
We are talking about how to trade small dollars. And this is owing to the small exchange's US dollar product /SFX, which is a dollar forward product that is pitted against a whole handful of other currencies. You've got some North American currencies in there, Mexican peso and Canadian dollar. You've got the euro and sterling in there. You've got Japanese yen, and actually what is a nice little kicker is the Chinese renminbi. And Pete, this is it's funny. Maybe you could do a little bit historical work on this, because there used to be a dollar product that was kind of the standard for people trading, and I think that was /DX.
It was.
Now that's gone away for a little bit, and now we're trying to kind of fill that void a little bit with a smaller product that makes a little bit more sense. What's the history with the dollar product here?
Right, Frankie. And you know what? It was built when the U.S. came off the gold standard and had floating exchange rate. They built what they called a trade-weighted dollar index. So they included, and I want to get this right, I believe 6 currencies. It used to be a bunch of different ones before the Eurozone, but it's euros, it's sterling, it's the Swiss franc, it's the Swedish krona, and
yep.
I love Sweden, but I have no idea why that's included in the basket, and the Japanese yen on a trade-weighted basis. So it is a dollar index. It is probably, and we believe, a less relevant index to what our traders want to trade. China is in the news every single day. The effect of the Chinese currency in the economy is something that's tradable and interesting today. We built an index for the next generation, not the past generation. So I think it's a much more relevant product.
Sure.
And I think you see that playing through UUP, which is a tough trade, is that old trade-weighted dollar index.
Yeah.
And it's a much less interesting trade.
Well, and even
something that was relevant, 25 years ago, not relevant today.
And even backing up a little bit further, some people who are maybe looking at trading currencies for the first time here, and potentially dollars with the small dollar product for the first time here, maybe aren't even understanding the concept of, why does the dollar why does it matter if Swedish krona or whatever currency, Chinese renminbi, if one's more relevant than the other, I don't get it. I thought I was trading dollars.
Right.
And this is an interesting asset class, and one that I think this is part of the reason why it affords so much opportunity, is that you need to trade dollars against something, right? And the fact that you're trading dollars against what we think are the most relevant economies affords for a lot of back and forth. And what we'll see, and what we've seen, is those relationships kind of can create some indecisiveness, some lack of trends, I guess I would say. Currencies, unless there's something going on like Brexit with the British pound of 4 or so years ago, you saw some trending from that because it was very specific. But with a big global idea like COVID and the fallout from that, you see the fact that the dollar needs to be traded against something, those relationships push and pull, and you don't tend to see a lot of trends one way or the other, right?
You're absolutely right, Frank. And that's where, right. And this isn't an either or situation. When the pound had that move up and down on Brexit, was it an interesting trade? Absolutely. And it doesn't take opportunities like that out of the equation. But we know that was then, this is now, and those kind of events are few and far between. So there's a place for individual currency pairs, but I really think there's a longer term engagement piece in a dollar index, because I want to hit it from the other side too, Frankie. A more holistic, simpler product to trade and add, but also, and I think we don't often think about this, especially living in the U.S. We're very U.S. centric. Everything we think about is, it's just the nature of being a huge country. But everything we trade is priced in dollars. The gold we trade, the crude we trade, the equities we trade. Go ahead, pick a poison. It's all quoted in dollars. And so what do we have the most exposure at the end of the day in? Is it in equities? Is it in gold? Is it in crude? Well, I'm pretty diversified there. Yeah, but what do you have against all those? You have dollars. And again, these are all things traded around the globe. So let's find a way where we could truly diversify. And I think this dollar index is that piece of diversification and balance you can put back into your portfolio.
No, very, very cool point there from an asset class point of view. And now if we dig into two of these asset classes, it's also interesting that this, like you said, Pete, isn't a singular currency pair. It's almost like its own version of a stock market where you've
Right.
got a basket of things. And like you said, there's a place for, I mean, we were trading British pound like mad 3 or 4 years ago around Brexit. There was a ton of opportunity in that singular currency exchange rate. But it's the same with like when Amazon has earnings. Yeah, there's a lot of opportunity in trading Amazon, but a lot of times there's a great opportunity in trading the basket, kind of the broad view. And that's what this SFX product is relative to, the SM75 or S&P 500, which essentially just baskets together a bunch of stocks to get you a stock market exposure. We basketed together the US dollar against a bunch of other currencies to get you US dollar or, foreign exchange exposure, whatever you want to call it. And digging a little bit deeper into this idea, Pete, stocks and dollars don't tend to move each other. While U.S. stocks are priced in dollars, it's not like the dollar getting stronger necessitates weakness in those stocks or, vice versa. If there's a weak dollar, stocks are really easy to buy. There's not this historical relationship between the two, right?
No, and you make a great point. No, and you could cherry pick times and go, look at that. There it goes. Well, you can pick any two random things and cherry pick some sort of divergence and convergence.
Sure.
But it is that this is what's good is that relationship doesn't exist. So it becomes an independent occurrence. And we know the importance of adding independent occurrences. If there was that correlation, a divergent or convergent pairs trade between equities and the dollar, we'd look at that. We know it's random. So we look at using and empowering ourselves by using it in a different way. And that's for the fact that it is an independent occurrence that we could trade on its own without this fact of, well, I need to know that these tend to move together. So if I'm long, I probably have too much long here.
Sure.
It's a different tool, which is good.
Well, you're totally right. There's this concept of, okay, this is a new product. I've never traded currencies or US dollar or anything like that. Should I be worried? Yeah, if I see opportunity in buying stocks today and opportunity in buying dollars today. And I would say from a broad point of view, no. Historically, the relationship isn't there. But I want to do exactly what you hit on there is cherry pick a little bit because correlations have gotten really strongly negative in recent weeks. And I think this is a very particular time. Obviously, given the fallout of March, and this is where I am cherry picking from, is the last month, but really the last couple of months, as you can see, from a long-term perspective, really no correlation between these two markets, stocks and foreign exchange. So you can have that peace of mind. I don't really have to be worried about being long both or short both or long one or short the other. They don't really dictate what the other one does. But you've seen this growing negative correlation, especially in recent weeks, the recent months since COVID took down the stock market in early March. And I wanted to kind of dive into this a little bit, maybe play a little bit of devil's advocate, because when you see stuff like this, Pete, I think we primarily go, okay, that's cool, but I'm just going to keep trading these both as their own thing and not really worry about trading the convergence or divergence in correlation. That's something that you and I always kind of not laugh at, but kind of don't take too seriously, which is, correlations have gone from being zero to being really negative now. How does that really put money in my pocket? It's hard to say, but the relationship is here. You can really see it. It's almost kind of move for move, as you see here in the white is the US dollar and the orange is the stock market. And you see every kind of rally in the stock market is met with some selling in the US dollar to the point where stocks rallied to these highs. Dollar hit lows on the same day for the last couple of months. And now you saw a little reversal off of those stock highs and a little reversal off of those currency lows. So, Pete, I mean, long term, these are two diversified markets. Short term, though, since pretty much this movement here in March, and it's funny because you see almost a positive correlation in the first part of this graphic. almost right until like this is the moment where they went straight negative correlation to the point where you saw stocks selling off with dollars selling off, and then dollars, it's like today, this day right here, dollars decided to have a negative correlation to stocks, and they rallied their freaking faces off all the way to highs as stocks hit those lows, and it's been a negative correlation since. I mean, the relationship's obviously there in the short term, right?
Yeah, and it is, Frank. And I think, you know what, we do use correlation. We look at pairs like the Canada and the Aussie, and we know whether we're looking at, and your example was great there, you know, from a 3 years on end. Correlation and trading pairs reversion, when you go out and you see 3 years is 70%, maybe the short term is 60 or 65 because the pairs are diverging, or 80. That's a consistent correlation metric. That creates an interesting pairs traded when the underlying's diverge or converge. But when you look at what you just showed there, there's no consistency in any of that. It's really relatively random. So, you know, that looking at that and saying, okay, this is something for me. I mean, I pull two very different trade ideas out of this, and I really look at them as independent trade ideas. Yeah, well, the chart can tell you one story, but oftentimes you have to gauge that against, you know, a little bit bigger perspective.
Well, so this is interesting. So what does this mean? Let's get, you talked about how are you going to trade small dollars? Let's get to actual trading now, after you gave me all this background historically and correlation, number crunching, all that stuff. And it's funny, Pete, because I like this idea from the way that I've painted it in this presentation, which is correlations have gotten really, I mean, negative 0.9 is about as strongly negative as you get without the two markets literally being complete opposite markets. And I also like the fact that on today as well, you're seeing a bounce in the dollar, and you're seeing a slight bounce, although they're giving away a little of it in the stock market, at least a bounce off of the lows of yesterday. And Pete, I like it from the way, like I said, that I presented it today, but you almost kind of liked this idea as two separate things that are now kind of being married through this, which is a short trade. You've liked selling almost every bounce in the US dollar that we've seen. You've liked being short. I mean, you and I have both liked being short the dollar probably from too early. And now that it's down a little bit, you're looking at selling a lot of these bounces in the US dollar. And we've, liked being short the stock market from, the last couple of years when it went to all-time highs almost every single day. And when this bounce got to be a little bit ridiculous all the way up here in the mid 40s, what do you think about this short play? With the negative correlation lends to either a long or short play from a diversified standpoint, from like a kind of hedging standpoint. What do you think about if I've got, some short equity exposure, or I want some short equity exposure, putting some short dollar exposure against it, knowing that recently stocks, when they underperform, the dollar has maybe bounced a little bit and vice versa. So given this negative correlation of the last couple of months, I shouldn't get hit on both.
Right. And you know what? I think you set it up perfect. And I love the fact especially with pairs like this, there's a great temptation to go back and, theoretically, macroeconomically, and just stop right there, because you can paint this whole different reasons for the intermingling of this. It makes no difference whatsoever. I like it. It's funny because I think the trade is spot on, because those are both of the ways I want to lean. Yeah. I certainly wouldn't look at selling one and buying the other, looking for those two lines to intersect. Because honestly, Frank, I don't know what I have on at that point.
Exactly.
Long dollars against this, and which one is actually, usually we do a pairs trade. We often, part of the benefit of pairs trade is sometimes the leg we don't think will move does pay us. Sure. Here I have no idea what I'm expecting on that reversion trade. I do like the idea of this adding this dollar component in this fashion. I think the negative correlation speaks to a short-term trade that should, and I think, sometimes we look at trades offensively or defensively. I don't want to say this is defensive because you're putting on risk, but you're looking at it as, and I think you summed up wonderfully, how bad can I get tagged on both these legs if I'm wrong?
Sure.
And we know there's no telling, but I think in this particular instance for this trade, you're spot on.
Yeah.
You shouldn't necessarily get tagged on both sides.
Yeah, it's funny that I kind of arrived at this short trade that you've just been doing kind of individually on their own.
Yeah.
To you, it's been a short dollar and a short stock play on their own, and to me, they're kind of a little bit of a pair. But also, I think this might be interesting in the long term. But for you and I, the long term really means just like a week to a month. It's interesting to look at this dollar component. You already started to do it, Pete, as a hedge, which is if I maybe got in too early and selling stocks up here, I don't mind selling into this dollar bounce to get myself, like you said, I don't know if stocks are necessarily going to be the piece that moves in my favor, but what I'm doing by selling dollars against a short stock position is I'm saying, okay, if dollars continue to bounce and continue to go against me, then given the negative correlation, the short dollar piece should help out a little bit. And same from the long side. If you're buying stocks into the sell-off of yesterday and a little bit of today, though we're not nearly at these lows, if you're buying the stock market here, a long dollar position would be a hedge against that in the semi-long term. But at the end of the day, Pete, you can just look for opportunity in small dollar itself. We've seen a growing bit of interest in this product for sure in recent days and weeks, because I think people are realizing this is one of the only products that they have just straight up US dollar exposure with efficiency of futures. Only a couple. I mean, the margin on this, I think, is in the range of $100 to maybe $300 or so to trade. It's a nice dollar product on its own as well.
Yeah, absolutely. And you're right. It seems like it's a higher valued index. Don't get trapped into thinking that makes it necessarily a bigger animal to trade. Always kind of take a look at that buying power as a metric of what you're doing. And it is sitting slightly on either side of $100. So here's exposure that's manageable, comfortable, and lets you, it doesn't take you out of the game for other things, but it does let you add something that's an interesting component and true diversification.
I absolutely agree there with you, Pete. And that will do it for trading small dollars.